Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week focuses on Nigeria's second quarter 2023 GDP report. Last week, the National Bureau of Statistics published the Gross Domestic Product (GDP) data for the second quarter of 2023. The Nigerian economy grew for the 10th consecutive quarter. Real GDP rose by 2.51% year-on-year, that is, Q2 2023 versus Q2 2022, lower than the growth of 3.54% year-on-year recorded in Q2 2022, but higher than 2.31% year-on-year recorded in Q1 2023. The improvement in growth in the second quarter can be attributed to a broad-based improvement in the non-oil sector, despite a considerable slowdown in the oil sector. GDP tracks how an economy performs and measures the value of all final goods and services produced in an economy in a given period, usually a quarter or a year. Real GDP reflects the actual value of goods and services produced without the influence of price movements. Simply put, the GDP of a sector can be affected by both the volume of goods and services produced and the respective prices. Nevertheless, what's important is the increase in goods and services produced rather than the price increases. Nigeria's GDP report captures 19 sectors, but only 5 sectors account for 72.3% of total activities in the economy. These are agriculture 22.7%, ICT 19.5%, trade, wholesale and retail 16.6%, manufacturing 8.5%, and mining and quarry 5.5%. The non-oil sector, which accounts for 94.7% of Nigeria's GDP in Q2 2023, remained the driver of the GDP. The non-oil sector grew by 3.6% year-on-year in Q2 2023, relative to 2.8% year-on-year growth in Q1 2023, but less than 4.8% in Q2 2022. On the other hand, oil theft intensified as oil production volumes dipped to 1.2 million barrels per day from 1.5 million barrels per day in Q1 2023 and 1.4 million barrels per day in Q2 2022. The sector recorded its 10th consecutive contraction, moderating by negative 13.4% in Q1 2023 as against negative 11.8% in Q2 2022 and negative 4.2% in Q1 2023. Based on the contribution of sectors to GDP, the services 58.4% in Q2 2022 versus 57.3% in Q1 2023, and the agriculture 23.1% in Q2 2023 versus 21.7% in Q1 2023. Sectors picked up momentum, while the contribution of industry declined 18.6% in Q2 2023 versus 21.1% in Q1 2023. The industrial sector reverted to the negative part after taking a breather in Q1 2023 to print at negative 1.9% in Q2 2023. Growth in the services sector remains strong at 4.4% year-on-year in Q2 2023. On the other hand, the agriculture sector grew 1.5% in Q2 2023 from negative 0.9% in Q1 2023, signifying recovery from the impact of the cash crunch. Our takeaways: 1. Due to the recovery from the cash crunch and the successful conclusion of the general elections, only 2 sectors contracted, the mining and quarrying and transportation sectors. However, 9 subsectors recorded negative growth rates. 2. Unfortunately, oil production stayed below the OPEC quota of 1.8 million barrels per day and below 1.7 million barrels per day assumption for the 2023 approved budget. The 1.2 million barrels per day oil production in Q2 2023 was the lowest since 2016, save for Q2 2022. The persistent negative growth rate in the crude, petroleum, and natural gas sector can be attributed to low crude oil production due to the persistent oil theft, prolonged operational and maintenance issues, as well as divestment of international oil companies, IOCs. 3. The agri sector bounced back into positive territory after recording a negative growth rate in Q1 2023 for the first time since 2016 due to the cash crunch in the first quarter. However, the livestock subsector is not totally out of the woods, with a negative growth rate of 2.3% in Q2 2023 due to insecurity and rising input costs. 4. Growth in the ICT sector remained strong at 8.6% in Q2 2023, though dragged by the motions, pictures, and music production subsector, with a negative 2.0% growth. The telecommunications subsector grew 9.7% in Q2 2023 as Nigerians sustained strong spending on voice and data. 5. While we observed an improvement in growth in the trade sector to 2.4% in Q2 2023 from 1.3% in Q1 2023 due to recovery from the cash crunch, this performance is still a far cry from the quarterly average of 5.2% in 2022. Overall, while the economy shows some recovery from the cash crunch and election uncertainties in the second quarter of the year, the third quarter may be dragged by the impact of higher prices of goods and services due to high fuel prices and naira depreciation. However, the expected improvement in oil production due to the FG's determination to reduce oil theft may boost growth in the third quarter. Consequently, we project a 2.6% year-on-year growth rate in Q3 2023. Notably, we need to grow above 5% for Nigerians to experience all-inclusive growth. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.